Happy Sunday, guys. Welcome back to another video. So I figured before I watch my Eagles here kick some butt later on today, I figured let's break down 10 stocks I'm watching for this week, all of which are reporting earnings. And guys, earnings season is in full swing. It's back. So cheers to that, guys. We have a lot to cover in this video. So hit the like button. Do not forget to subscribe and get your 30 stocks for a moo. Open up your account using that link down below. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks. I know it's crazy, but it's legit, guys. And your uninvested cash for now will earn up to 8.1% APY. So if you guys want 30 free stocks and you want to help out the channel as well, check out the Moo link down below or go to StockSurfS.com/Moo. And with that being said, cheers. Let's dive into it. So like I said, guys, we are heading into a big week. A lot of companies are reporting earnings, and we have to break them down. And I don't want to waste any time. We have a lot to cover today, guys. I don't want to waste any time, so let's get into it. So the stock market on Friday, I'm sure you guys remember, did not have the best day. We had the S&P go down 0.3%. The Dow went down roughly the same with the Russell. So it wasn't, a crazy red day, but we were down across the board. QQQ went down over 0.5%, and this is after we got, obviously, a huge run in the stock market heading into the inauguration, then after the inauguration of President Donald Trump, right? And we're now getting a little pullback, finally, a healthy little cool off, whatever you want to call it, which, guys, if you look here at SPY, this still looks very good for the bulls. We're simply getting a little cool off period, right? Which is healthy, right? So with that out of the way, that's kind of how we're looking here on these indexes. I don't want to get too deep into this. All these are still crushing it, right? And honestly, guys, all-time highs are probably coming for all these indexes. S&P just hit one a couple of days ago. Dow's pretty close. Same with QQQ. Russell not too far away. It's coming. In my opinion, it's only a matter of time. So, what do you guys think about the indexes? Let me know in the comments. And now, let's just get into it. Break down these 10 stocks. We'll go over the charts, the estimates for EPS, revenue, go over what I'm looking to do. So yeah, it's going to be a long video. Make sure you guys stick on throughout. Let's get into it with stock number 1, which is none other than Apple, ticker symbol AAPL, which I did cover briefly in my video yesterday, but now I want to go over their numbers a bit more in depth. So heading into earnings on Thursday after the bell, Apple is pretty oversold. We're down $40 a share, about 14% from highs. By the way, that's an all-time high, $260 per share. Now we're at $220. And again, we're a bit oversold. We have a death cross, and now we're at the bottom of this channel. You guys can see here on the 4-hour chart, this is where we've held over the last couple of months, right? Well, I guess we did break through this support. This failed to hold, but even here where we're at, still technically a higher low, right? And if they do pretty well in terms of earnings, I think we're going to get a snapback, right? It's at a point now where it's beaten up a bit. For it to go even lower, earnings have to be bad. Guidance has to be bad, which I don't see it, to be honest. I don't see that happening. So I think Apple, guys, if they slightly beat, if guidance is a little better than expected or even just as good as expected, I think that's all it's going to take for Apple to get a rebound here, right? So EPS estimate is $2.34 versus $2.18 from last year on the quarter, guys. So EPS is expected to grow year over year, and revenue is expected at $124.04 billion versus $119.58 billion from last year. So revenue, it's not going to grow a lot, but it is projected to be up 3.7% year over year. Not too shabby if you ask me, guys. But again, It all comes down to guidance, really, and earnings. And I'm curious to see, since earnings are on Thursday after the bell, so we have 4 full days of trading, I'm curious to see if we get a rally into earnings. Really curious to see if that takes place here, guys. So I'm going to set my alert I'll put it at 225 for now. Mark is at or above $225 per share. So let's keep going. Number 2, Tesla, TSLA. They're also this week on Wednesday. Told you guys, jam-packed week. We're just getting started. Tesla is on Wednesday, I think after the bell, right? Yeah, they're always after the bell. So they're going to be one of the top companies worth watching for this week, obviously, for obvious reasons. And heading into earnings, guys, we still have a wedge here on the stock. Do you guys see it? We have higher lows being made, but at the same time, lower highs. You guys see it, 488, 470, 450, right? Lower highs, but higher lows at the same time. And on Friday, we had a 1.4% red day, and we're slightly under both moving averages right now on this 4-hour chart. So keep that in mind. Keep that in mind. But of course, with earnings, man, it could easily break out. No problem. We've seen it happen time and time again. So even though it's in the wedge, under the moving averages, bears might be gaining an edge in the very short term. All it takes is good earnings, and boom, Tesla could be breaking out yet again. So I'm waiting for direction. That simple. Here on Tesla, I'll set some alerts right now. I'll do one at $400. Mark is at or below $400. And I'll do another one at, let's say maybe Mark is at or above $415, something like that. And we'll see if it's able to break out of there and see what direction it ends up picking. So Tesla, guys, they're projected 77 cents earnings per share versus 71 cents from last year on revenue of $27.14 billion versus $25.17 billion from last year, up around 7.5% to 8% year over year, in that ballpark, right? So some of these big companies, guys, Tesla, Apple, they're not growing crazy at this point, at least in the Q4 quarter compared to the previous year. They're not seeing much growth. And even on a full year basis, I was looking at Tesla's numbers yesterday. Excuse me, guys, still getting over this little tiny cold I have. Bear with me. Even for their full year 24 numbers, Tesla is projected to be pretty flat. I mean, barely any growth in 2024 compared to 2023. And it's Elon Musk's job, well, to get that going again. There's obviously rising competition. There has been so much going on. So yeah, Elon, we got to get that growth back at Tesla. Hopefully it comes, right? So alerts are set Wednesday after the bell. We're getting Tesla. And we also have Meta this week, guys. We have Meta, which is breaking out into earnings, which, by the way, guys, we called this out. The breakout to the top of the channel. Let me extend this to the right so you guys can see. Boom. Now we're at a fresh all-time high on Meta heading into earnings. So let me see here, guys, on what day are they? On Tuesday, Wednesday? They're Wednesday after the bell, same day and same time as Tesla. So Meta is projected EPS of $6.75 versus $5.33 from last year on revenue of $46.97 billion. That's the estimate, versus $40.11 billion from last year, up 17% year over year. So out of all the big tech companies, guys, Meta is definitely experiencing some of the best growth still, even at this stage of the company, as it's well over $1 trillion, whatever the market cap is these days. They're still crushing it. And if TikTok gets banned, guys, man, you know who's going to be happy? Mark Zuckerberg. This guy's probably, rubbing his hands in the corner right now. He's like, oh, I hope TikTok gets banned, because guess what? All that traffic is going to Meta, to Facebook, to Instagram, to Reels, this, that, the third, right? They're going to see a huge uptick in, views, eyeballs, traffic, which equals what? more money. But I don't think, honestly, TikTok's going to get banned. I've been in that camp for a long time, and I think it's going to get sold. I mean, the deadline got pushed back, 75 days? Trump signed an executive order, and I think they're going to come to a deal. It's only a matter of time. I could be wrong, though, and if I am wrong, Meta, they're going to be they're going to benefit big time from this, right? And as of now, it's a bit overbought. I'm not looking to chase it here heading into earnings, so I'm going to see how earnings look, guidance, and see how the stock reacts, and we'll go from there, guys. Let me get some coffee quick. Cheers, by the way, guys. I appreciate you all for tuning in. And by the way, if you haven't subscribed yet, make sure to do that. We're almost at 50,000 subs, and I think 50-60% of you guys watch the content, but for some reason, you're not subscribing. So if that's you, make sure to subscribe, and let's get on with number 4. Stock 4 is UPS, which is another big company, another important company to watch out for, and it has not been doing well. UPS has been struggling all of 2024 pretty much, now in 2025 as well. You guys can see it's been downtrending for years. Forget 2024, 2025. I mean, this thing was struggling in 2022, 2023, and it needs something positive to turn it around. I mean, the stock price is up a good $10, $11 off the recent low, but we're still very much in a downtrend heading into earnings on, I think, Thursday. Let me double check. Maybe Wednesday. Yeah, they're Thursday in the morning, guys. So UPS, they're projected $2.53 earnings per share versus $2.47 from last year on revenue of $25.5 billion roughly versus $24.9 billion from last year. So up a measly 2%. Not much. Not much. And I'm curious to see what guidance looks like for UPS. Hopefully it's good. Hopefully something comes out that can actually get the stock price moving again. It's been a while. And what's FedEx doing? Their competitor. They're not reporting earnings this week, but I figured, it looks like FedEx has actually been doing the opposite of UPS. Their stock's been going up. UPS has been going down. Yeah, UPS, guys, they got to figure it out. I don't know what's going on there. But the next one here, guys, stock number 5 is Mastercard, ticker symbol MA, which at this point, we're at a big multi-week resistance, and we actually have a bit of an ascending triangle in the making, right? Resistance at 535, 538, but making higher lows into that resistance, and we're pretty much there now. As of Friday, we got hit there again in the mid-high 530s, but if that level breaks, guys, Mastercard could be going a lot higher. And it all comes down to earnings, right? What are their earnings going to be? How's the guidance looking? If it comes in hot, expect a breakout here on Mastercard. It's been on the verge of breaking out for quite some time. So I'm going to set my alert at 540 EPS for this company. It's projected at 371 for this year, for this quarter, versus 318 from last year in the same quarter on revenue of $7.38 billion versus $6.55 billion from last year. That would be up 12.7% year over year, right in that ballpark, guys. So keep your eyes peeled on Mastercard. My alert's at 540. Intel is another one. INTC is the ticker, which you guys know it's been struggling for quite some time. Intel's reporting earnings, I think, on Wednesday. Let me double check that. No, Thursday the 30th after the bell. We're getting Intel's earnings, and this stock, man, is trading at a multi-year low at this point, right? Yeah, 3-year low. Last time we were in the low 20s. I mean, forget the 3-year low. Holy moly, guys. Last time this thing was trading in the low 20s. Am I reading this right? Oh my goodness. It was back in 2010, guys. Holy smokes. So Intel is essentially at a 15-year low right now. I don't even know what to say about that. And it makes sense. I mean, the company, you guys know, it's cyclical, right? They have not been doing well. They hit $70 back in 2021. All right, nice. But now we're at $20, man. And, their EPS, not looking good. 12 cents versus 54 cents from last year. Very bad year over year. And revenue, $13.83 billion versus $15.41 billion from last year, down 10% year over year. Yeah, not the best sign for Intel. The chart looks terrible. So for me, guys, I'm not touching this thing with a 10-foot pole. I think it's honestly a value trap. I think it might be a value trap here. We'll see, but I don't know. The next 4 years with Trump, what's going on in, Taiwan with China, I don't know. Intel could be a nice turnaround for all we know, but for now, I'm not touching it. So the next stock here on the list, guys, is Visa, ticker symbol V. This one just hit a fresh high on the 4 hour. I'm assuming it's an all-time high. Yeah, we just hit an all-time high on Visa, so we're pretty overbought heading into earnings by the looks of it here on the chart. Earnings are on Thursday after the bell. They're looking to do earnings per share of $2.66 versus $2.41 from last year on revenue of $9.34 billion versus $8.63 billion from last year. That would be up 8% year over year. Not bad for Visa, but guys, trust me, it's going to take a grand slam earnings report or just a great earnings report for this to go even higher. So be careful with Visa, guys. Not saying it's a bad company, not saying it's a bad stock. It's just a little overbought, pretty priced to perfection heading into earnings. So Starbucks, SBUX, guys, it's been a while since I've been a Starbucks. I'm not going to lie. I think this chain or whatever you want to call it, the quality, in my opinion, just my experience, my wife, she agrees as well. Although she did tell me earlier that she had Starbucks yesterday for the first time in a while, and it was great. What she got was great. But does anyone else agree, like 5-10 years ago, Starbucks was just so much better? I mean, nowadays, it's so inconsistent. It kind of reminds me of Dunkin' Donuts. I used to go to Dunkin' Donuts all the time to get a coffee years ago, and they would just screw it up, and they were never consistent. And then I would go to Starbucks. They were always consistent. But now Starbucks, I don't know about you guys where you live, but here, man, all the Starbucks I go to, I mean, sometimes it's good, sometimes it's bad. And this is back when I would go often, like 2 years ago, 3 years ago. It's been a while since I've been a regular Starbucks customer. And the stock price, man, looks like a lot of people have been cutting back on Starbucks. I mean, the stock price has not done anything. It's been a garbage stock for years now. I mean, this stock, look, guys, it's at the same price it was before COVID. I mean, that's not a good look. We're talking like 6 years now. Starbucks has not gone anywhere in 6 years, and I'm not necessarily looking to invest in it. I don't think it's a great investment right now. I think if you were to buy Starbucks, I think the glory days are behind it as an investment, personally. If you look at the max chart, the time to invest in Starbucks was in 2010. I mean, that's when it started going ballistic, right? Starbucks was $5 a share, $6-7 a share, and it got all the way to $125. Now the company is more mature. Growth is slowing down. Quality's going down. It's at that point of its life cycle, right? Which kind of sucks. I feel like Starbucks, they expanded too much. It was much better years ago, but rant over, guys. Rant over. Forget about it. EPS 67 cents expected versus 90 cents from last year. Yeah, down a lot EPS wise. Revenue $9.32 billion versus $9.43 billion last year. Revenue down 1.1% year over year. Not the best look. And I think they did get a new CEO, whatever. Hopefully he turns things around. But guys, yeah, I mean, there's a couple stocks out there that I'm not a big fan of. I think they're not necessarily value traps, but I think they're just traps in general. Nike, not a big fan of that stock. Starbucks, Intel might be a trap. We covered that earlier. It might be. Not the biggest fan, but I'm still watching them. I'm still watching them as earnings are this week. And before we wrap up the video, guys, with the last two stocks in the video, make sure to get your 30 stocks. You might as well do that as well, but get in the email list. Sign up to the email list. You get my top stocks right to your email for free, guys. No credit card, no strings attached, no this, no that. Put your first name, put your email address using that link in the description box, also in the comment section. And again, it's free, and I send you guys my top stocks right to your email. And you might as well get your 30 stocks for Moomoo as well while you're at it. Linked down below, guys. So 2 more stocks. We have Exxon Mobile, XOM, on Friday. And Exxon Mobile has been quite volatile, no doubt. The stock's been all over the place from 126 in October down to 104 about a month ago. Then we hit all the way back to 117 just about a week ago. Now we're at 108. I mean, this thing has been all over, right? And Exxon's on Friday, they're looking to do earnings per share of $1.79 versus $2.48 from last year. Not expected, from last year. And revenue, $87.2 billion, guys, versus $84.34 billion from last year, up 3.3% year over year. Not much growth there, but I still think Exxon's a great company, great stock for the long term. And I used to own it. I bought it after COVID. I made a good profit on it. I think I bought it at like $30-40 and I wrote it up. And now my only energy exposure is in XLE, other than, of course, my S&P 500 ETF or my total stock ETF, whatever. But XLE is my direct energy exposure, which is an energy ETF. I've owned it for years, bought more recently, and I'm going to continue holding it, guys. It's about 5% of my portfolio, and I like it. I like having it in there. And yeah, Exxon, I'm curious to see what they end up doing. And the last stock here, guys, is AbbVie, ticker symbol ABBV. AbbVie is on Friday as well. They're looking to do EPS of $2.98 versus $2.79 expected, or not expected. Why do I keep saying that? From last year. From last year, guys, on revenue of $14.82 billion versus $14.3 billion from last year, up 3.6% year over year. And honestly, guys, the chart on AbbVie does not look the best. We kind of have a head and shoulders here. Also, a descending triangle, kind of. You guys see that? Lower highs being made into that 170 support. Not the biggest fan of that, but who knows, man? Who knows? With earnings coming up, anything is possible. So yeah, guys, with that being said, these are 10 stocks I'm watching right now. There's honestly another 10 we can make a video on, but that's the 10 for this video. And these are all ones you have to watch, man. They're going to dictate what the stock market does this week. And honestly, the next couple of weeks, earnings are going to shape things up. So, yeah, get ready. Make sure to subscribe here for more content. We're going to break down all these stocks when their earnings actually come out. So, subscribe, hit the like button, and get your 30 stocks for a Moomoo. Open up your account using that link down below. Deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks. And overall, for now, your uninvested cash will earn up to 8.1% APY. So guys, use the link down below or go to StockSurfS.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next one.